people were concerned that there's going to be big outflows out of the spot Bitcoin ETFs, and there simply weren't. In fact, the biggest Bitcoin ETF, BlackRock, had zero inflows, zero outflows. That goes to the mindset of investors and the investor class being the boomer class. They have been taught, and they have been taught, and they've been taught, and they've been taught to buy and hold. And oftentimes when there's a dip, to add a little more to their position. And that played out perfectly over the last 48 hours.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, last week was not exactly the greatest week for Bitcoin. We finally got the dreaded 30% crash that we've spoke about that could potentially happen for Bitcoin, but it hadn't happened yet in this cycle. And then Bitcoin bounced back dramatically. However, during that move, it did take out some of the lower levels, and this is leading to a lot of fear in the markets, right? The last time we were speaking, the big question on everyone's mind was, does this mean that we're now out of the bull market and we're entering into a bear market? Was this bounce that we're seeing for Bitcoin enough specifically? If you have a look at the charts right here, we had this beautiful parallel channel that had been forming, all the way since back here. We got above it. It acted as support for quite some time. We had a nice test here, but then this drop, this crazy drop down to 48, we kind of lost that area, right? And if we have a look at where Bitcoin is right now, you could say we're in a very, I would say, important area, because we're now pressing against the bottom of this giant range that we were in previously, right? And that's basically around that roughly $61,000 area. So you could see we're attempting to break through that area. We also have the heart line coming up, but what's kind of creating that fear is if we do keep bouncing around in this area, there's really not much more to go, until Bitcoin could basically have to make that decision of whether we're continuing to the upside within this channel, right, that we formed since all the way back here, or if we're looking for that breakdown. So I wanted to talk about a few things today, but there is something to just kind of keep in mind. And I do want to show you later in this video that if, let's just say hypothetically, this was the top for Bitcoin, then that would mean that Bitcoin is doing something that we've never ever seen before. Now, obviously, we've had a lot of sort of anomalies this time around, right? Falling below the 200 weekly moving average, putting in a higher high before the halving, but something even larger at play that we've seen time and time again for Bitcoin, well, it's not quite showing that right now, which does, I guess you could say, give us mixed signals, but I do want to discuss why this could be giving us hints as to what could be happening. Also, I want to discuss why we could have potentially seen such a large dip. I want to talk about how this plays into traditional markets, because if you follow traditional stocks, it kind of seems like they have rough August to September area. Those are just kind of range-bound times for traditional stocks. So how is this going to play in with Bitcoin? Also, with some of the geopolitical tension that's been going around, there's a lot we need to unpack today. So stick around, guys. This is a much overdue video. I have a lot to go over. Hopefully by the end of this video, you will have a much clearer idea of where we are and what is happening in Bitcoin right now, guys. And I do want to just make a friendly reminder that we do have until the 18th of this month if you guys are looking to trade. Obviously, I do like CoinCatch. They've been an amazing exchange to trade on, especially for no KYC. But right now, we do also have a Blowfin 10% back cash back for trading. So, take advantage of those opportunities if you want. I do have a link below in the description, and some tutorials will be popping above. So let's start with a bit of what's been fearing people. Again, this is nothing new, this is nothing surprising, but the whole idea about these Mt. Gox coins being distributed, now you have $2 billion of this Mt. Gox Bitcoin that's been moved by BitGo. So again, this is creating that sort of fear of, are they going to dump on the markets? Well, the market already had a 30% pullback, which, like I was saying, it might seem scary since we've only seen the 25-ish area, but 30% pullbacks really historically for Bitcoin have been quite common. Another big culprit that we definitely have evidence of was Jump Crypto. You've probably heard of them, but they sold millions of assets during this recent market slump. And, this isn't the first time that these guys have sold before. Don't forget, they were heavily involved in the Terra Luna fiasco. And, well, we all know what happened with that. So the bad news is that, well, they were clearly selling, but the good news is that even with the Terra Luna crash, even with the FTX crash, we know that once these, I don't know if this is really a black swan event, but once these events tend to be over with, it actually is healthy for the market, right? Cleaning out a lot of the open interest, over-leveraged players, things like that, right? That actually is what allows the markets to then begin to move in that organic sort of fashion, right? So if you just have a look at this. First, we shut down the trading platforms. Well, what is this all about? So JP Morgan says that institutions bought the dip while the retail was panic selling. Retail sold about $1 billion. Institutions were buying $14 billion. So again, while everyone was out there panic selling, the institutions were in fact buying. And as you saw from the opening clip of this video, it wasn't really the ETFs, right? They weren't the reasons for these outflows. It was already people that were in the game, and unfortunately, it was the retail. It was the average everyday person who buys. They hope to get rich overnight. Markets are a little bit tougher than you anticipated, right? You know, they get in, they think it's going to be an easy ride, and it's not, right? I've been in this market for, almost a decade at this point, and these will catch you off guard, and they are designed to take the money from the weak hands and give it to the strong hands or the smart money or whatever you want to call it. But, this is why hindsight is 2020, but we were saying not to panic, and look where we are now, right? Again, there are some things in the charts that we can say are maybe some cautionary sort of metrics we should go over, but ultimately, this is what you would expect. I mean, you had from Bitcoin Archive, a wealth manager with $40 billion under management is looking to buy Bitcoin for their clients. We also had an update from Andrew about Wells Fargo saying that they're going to quickly follow Morgan Stanley with their Bitcoin ETF approvals, as well as a well-known bank with $1 trillion. They're basically having approved Bitwise, crypto industry innovators, for access to their wealth management clients, etc. Is this BitB? No, again, that would be the better one. But, baby steps, guys, baby steps. Like we said, everyone thought the ETFs were going to get approved, and every single individual was just going to hop in all at once. And we know that that is not how these things work. The real traditional markets, the real dinosaur money, traditional money, family wealth offices, these traditional asset players, whatever you want to call them, the smart money, whatever, they are going to take their time. They want to see that track record, and they're not just going to instantly offer it to the clients immediately. But as we're seeing, there are more positives than negatives to this, right? One thing that you cannot deny, and this is something that I cannot stress enough, is that we have the Bitcoin exchange reserves still on a steady decline, right? So this is showing us that there is less and less Bitcoin available for these market participants. So we know that some of them have still not jumped in yet. Now, when we do get this next wave of inflows, the question again is, where are they going to get this Bitcoin? If we have the least amount we've ever had on exchanges, okay, and we obviously have the ETFs, which need to hold these funds one-to-one, right? This isn't on paper. They need to have, if a client wants a Bitcoin, they have to have that Bitcoin. Where are they buying it from? Well, when you have a lower supply and a higher demand, you're going to get that supply shock, right? And I think that's sort of what we've been seeing, because as Key Young Ju pointed out, 404,000+ Bitcoin, this isn't dollars, this is over 400,000 Bitcoin alone, have moved to permanent holder addresses in just the last 30 days. They're moving it off the exchange, they're moving it into their personal wallets. This is not the type of actions that you see when you're looking for massive sell-offs, right? You would see the opposite. You would see personal wallets, individually self-custody wallets, you would see those losing Bitcoin, and you would see Bitcoin moving to the exchanges. Now, I understand the whole OTC thing, right? We don't always see that. But again, you would still see some kind of a movement, even just a little bit of an uptick. And we're seeing the absolute opposite, right? We're seeing more individual self-custody and less individuals sending it to the exchanges. Not to mention the fact that if you just want to look at how Bitcoin is doing in the grand scheme of things, if we look at the top money in the world, obviously gold is still number one. It's been around for thousands of years at a $14.81 trillion valuation. Bitcoin is at number 6, which puts it above all of these other, puts it above silver, puts it above the UK, puts it above Switzerland, India, Australia, Russia, Hong Kong. Right, and it looks like it's coming very close. I mean, only about a 5x from here, and you're looking at the same as the USD, right? And like Cryptos R Us pointed out, if you want to talk about what they're doing with the money, before I get to this chart, if you have a look at the DXY, look, the DXY broke this upwards trend. So not only did it find rejection at its resistance, but it also lost this upwards support, right? We have a little bit at around 102, but if this continues to fall, we know that this is genuinely good for things like risk assets or a newer class like Bitcoin, right? It has an inverse relationship. And what do they end up doing in times of peril? They turn on the money printer, or probably something you've heard a lot more recently is they may be looking to have those rate cuts, right? Now, if I go back over here, if we look at the 2020 Fed fund rate cut, look at what happened to Bitcoin. Okay, here's the cut. I mean, you could see it's directly, okay, it didn't happen immediately, right? Took a little bit of time, took a couple months. Again, markets are not instantly reactive, but look, boom, that is when the parabolic phase of the bull run started. So let's assume that they're going to have a cut maybe sometime this September. Who knows? I mean, there's almost like 100%. I think it's like 99.9% that they're not pricing it in, but they're saying there may be some kind of a cut. Well, at first, we could see some turbulence like we did back here. In fact, when they originally cut, price fell. On the initial announcement of the cut, the price fell. But if you were patient, you realized that that was the buying opportunity before the massive blow off top, right? So again, as we have a look at this, and here's a different chart. First, we were looking at the coin catch. Here's the blowfin chart. You can see we still have that same area of accumulation right in here, And we lost that area, right? We fell back down into the range. But as you can see right here, even with a larger ascending parallel channel, right? Assuming that, we could go even lower, which, I mean, we technically breached the low at around 52. We're still struggling at the bottom of this range. So I think as far as an immediate breakout for Bitcoin, or a massive price move, you'd really want to see us break and hold above this $61,000 area. And of course, this is just the short term, right? So funny, we were talking about filling the CME futures gap down here. We came up, we pumped it. We actually created another gap. We came up, we filled that gap. And now that we filled this one, we filled this one. Now we're moving back up towards the top, right? So, again, people call these gaps memes. They say they're just coincidences. Well, I mean, one time is a coincidence, 2 times is a coincidence, maybe even 3 times. But I mean, when you're consistently seeing these gaps get filled, you got to kind of say to yourself, is it just a meme? Is it a self-fulfilling prophecy? I don't know. But nevertheless, all these gaps got filled. So actually, I can just take that out right now because we don't even need this anymore. And, you could see price had its low. We had that buy wick to the bottom, and we're starting to move to the upside, right? And if we look at the longer parallel channel, which, by the way, we had this buy signal on the hash ribbon indicators. And remember, we said for the majority of the time, this signals a continuation. Now, the only difference is that we generally do not put in a lower low. In this instance, we did. However, by the end of the week, you could say, yes, okay, in the weekly movement right here, we did put in a lower low. However, that lower low was a perfect bounce. Actually, we had one back here in the beginning of the year, January. Right here, if we continue this up, look at that. Perfect bounce on the bottom of this ascending parallel channel. Super simple stuff, guys. Not complicated things here. And you can see that currently we were able to close this candle above the top of the channel, right? So this, which was acting as the resistance, right here, has now acted as support 1, 2, and currently it is supporting us on this 3rd week. So, markets have these crazy moves to the upside. They have these crazy moves to the downside, but you have to, zoom out and look at the overall picture, and we're still putting in higher highs and higher lows. So you can't really say the market structure is broken yet. Now, I've heard some talks about putting in this death cross with the 50 right here. If you guys see, this 50 is moving, and the 21 exponential is the green, but that's a shorter term. This yellow is moving below this longer term 200, right? So that's a death cross. But again, this is lower time frames. If you move it to the higher time frames, which, are the longer time frames, you have to have patience on these types of things. You're seeing the opposite. You're actually seeing a potential golden cross about to happen soon with the 100 moving above the 200. And you're seeing that we had somewhat, a little bit wick below, but support on the weekly 50. So really, our short-term goal, again, is to get above this guy right here, this green guy. And he is the 21 exponential, which, surprise, surprise, is coming in at the bottom of the range at around 61,000, right? But again, we are back above the 0.236 extension, which, basically once you get to 0, which takes us to the top of the move around 74, you're looking at price discovery. That's when you're looking at the massive move. Looking at another parallel channel, I know I'm getting kind of bored, probably boring you guys, but look, they work, right? These very simple channels, they work. And you can see this is the S&P. some people say that it's correlated to crypto. We've had this channel, right? A little bit of a deviation, right? A little bit of a fake out there, a little bit of a fake out here, but ultimately we are starting to push up again. So again, if you're looking at this from a risk on, risk off perspective, if the S&P is able to break and hold above its level, which I would say that level by the time it breaks above it is somewhere around, let's say 54.65, which is what, less than 1% away, then again, that could signal that price will continue to move. Often, sometimes they say you're going to sweep the lows again. Well, we had the lows back here. Maybe this was an attempt to sweep the lows, could we come back down and sweep them one more time? Sure. But again, the markets in general, even with this scare, are still showing constructive, not destructive patterns. If you wanted to look on the cautious side again, what did we do back here? Let me get this green line out of the way. We fell into the ribbon. Now, that did create some short-term market turmoil, but we still bounced out of that, and we ended up putting in a higher high anyway. And we spent a lot more time in the lower portion of the EMA ribbon, whereas here, this to me, look at this candle that we had last week. Very volatile, but look at that wick, right? Coming all the way, what is that just from bottom to close was 20%, and to the top was 27%. So, we had a crazy, let's say from this move down to here was that 30% move, but then from bottom to where we are now is a 24% move, right? So very volatile, but it is something to just note. And another thing to point out is when you're looking at these sort of black swan patterns, if you think we're going to have something like a mid-cycle correction, well, look at what we had during this COVID crash. We had a descending, broadening channel, right here, and then we consolidated and we had the breakout. Well, we don't have the consolidation just yet, but look at this megaphone pattern. It's falling. This looks pretty bad, right? You're putting in lower lows. You're putting in lower highs. That's a terrible pattern for the market. However, what happened? Once we broke out, massive continuation to the upside, right? Well, what does it look like we're doing now? Look at this right here and look at this right here, right? Zoom in. What are we having? We're having a megaphone pattern, right? A descending, broadening channel, right? So now we're back at the mid-range of the channel. And I showed you guys that all you do is you take the top, measure to the bottom, and that would give you a breakout from, the top of this area of around $90,000. So around that point is when we could start to get a little bit cautious. The other thing is, again, if you think it's a mid-cycle correction, well, one thing we know is that Bitcoin has never historically put, and I mean never, like this isn't even like maybe one time. No, this is a 100% as of today. Bitcoin has never put in a top until we've had the pi cycle indicator moving averages converge right here, right? So once they had this top right here, that happened right around this top, and we knew that the markets were looking for potential move to the downside. We had the same thing right here, even though, yes, we did have a secondary move higher high, but relatively, unless you were able to accumulate down in this region, basically in a nutshell, this was the top, give or take like $1,000, right? You just had to wait a few more months to reach that double top again, but it had signaled here. We had that crossover on the pi cycle indicators, and that signaled the top. What did we have here? Well, we had indicators where they didn't cross, but this started to curve down. Well, that's what we're starting to have here. So I would say, again, this is in my humble opinion, worst case scenario, if we were going to have a mid-cycle correction and it got worse, if we had another 50% crash, okay, it would not be, in my opinion, or not even my opinion, just based on what I see, it would not be the ultimate cycle top. It would just be a really bad moment where everyone thought that the markets were over because it went on for another year of these sideways, possibly lower levels, but it really didn't top until we have that cross. So as you guys can see right here, if anything, this looks more like this. Does it have to repeat? No. Could it rhyme? Sure. But again, if you take out this COVID crash, I do believe that this was healthy consolidation. So that's basically where we are at for this market. So that's all I got for you guys today. Ultimately, having a look at things right now, they were looking a little bit more neutral-ish, right? To maybe bearish. Now they're looking more neutral to positive, but really those are on the shorter time frames. Zooming out, having a look, everything is still looking like it's on track for Bitcoin. We still have multiple reasons to believe that there's still, if we're going to have one of the worst returns in Bitcoin's history, You know, what a terrible market. We only went from a 69 high last time to a 90 of this time, right? Only a 30% increase from the top. And that's like worst case scenario. Then I still think you're looking at that 90,000 to maybe wick up to like 102, 115. And that's again on the conservative end, right? I know you can talk about moon boy math. We could talk about $1 million Bitcoin. I'm really just talking low base case level here. It just wouldn't make sense based on what Bitcoin usually does and what I'm seeing in the charts and on the market. You know, provided we don't have some crazy black swan, geopolitical escalation of wars, etc. Who knows? We have the election coming up, who knows? But I mean, just based pure on the data, could it be a little boring? Could we have some more chop? Yes, but ultimately, we haven't broken fully down, and I do believe that the pattern is still intact. And I do think that, you know, if you're freaking out and you're worried, let's say you've been buying Bitcoin since it was 15,000, like we had told everyone on this channel, that was an amazing opportunity. If you've been buying all this time up, look, I'm not going to be the guy to tell you you can't offload a little bit. If you want to sell 20% of your Bitcoin or something, you know, not financial advice, you know, if that's what you need to do to sleep at night, fine. I would just be very cautious about taking all the cards off the table. Of course, that's just my opinion. I'm a guy on the internet. Don't listen to me. But I have seen these markets for many, many years. I've been through multiple cycles, and I'm just not seeing it right now. So that's what I'm saying, guys. Hope you guys enjoyed this video. If you do want to learn how to trade, check out these tutorials popping up right here, right now. You can deposit. You can get some cash back. You can also practice on paper exchanges. Or if you don't want to trade, just dollar cost average. Nobody ever goes wrong long-term dollar cost averaging, right, guys? So that's it for me. Thanks so much for coming back to the channel. Until next time, stay crypto, and of course, peace out.